It is 8:31 a.m. Pacific Daylight Time. It is the 13th day of August 2026. This is episode 1372 of Bitcoin, and it's me, your host, David Bennett, bringing you all the news that you can use about Bitcoin and macro from around the world. Going to be real quick today. I got to take one of my family members to the doctor, so we're going to just plow right into today's news. First up, Trezor. Yeah, Trezor has a breach. No, it's not a breach in their software. They cannot keep their customer data safe, right? We're talking about email addresses, shipping addresses, possibly phone numbers. Let's find out from Stephen Graves. He's writing for Decrypt. Trezor customer data exposed in shipping partner breach. So it was a third party. As we know, third parties are security holes. A data breach at one of Trezor's shipping providers has exposed the names, phone numbers, email addresses, and home addresses of thousands of the hardware wallet manufacturer's customers. ShipMonk, which stores and ships Trezor products, told the company on Monday that an unauthorized party had reached systems holding customer data. Some 11,742 customers had their full details taken, and another 2,000 had names, cities, and email addresses exposed, for a total of 13,689 people. Those affected placed orders between May 10th and August the 8th and had them shipped to the United States, UK, Sweden, Colombia, Brazil, Italy, and Portugal. Trezor said its own systems were not compromised and that no device, private key, or wallet backup was touched. It attributed the limited scope to a policy requiring partners to delete or anonymize order data 90 days after delivery, which meant older orders were no longer held. Customers who did not receive a notification email are not affected. In 13 years, the company added, it had never before had a breach exposing customer phone numbers and shipping addresses. Trezor's warning concerns phishing, and it advises customers to treat unexpected contact with suspicion and never to enter a wallet backup online. Yeah, that's all we really need to know before we move on. Phishing will definitely take place on these Trezor customers, but be aware. If you are an affected Trezor customer, and you might be one of the people that got their home address released, if you're not using a P.O. box for shipping, and it's coming straight to your door, just be aware. Take precautions with shipping, right? Like receiving packages. If one of the delivery people, drives up in a van that says, I don't know, package delivery, and knocks on your door, don't answer it. I know you can't see through doors. If you got a peephole, check them out first. If they're like, hey, I've got a delivery for you, you got to sign for it. I don't know what to tell you on that one. If it's like Amazon Prime, and their van is well marked as Amazon Prime, maybe, but I'm starting to get to the point now where even that I'm not all that sure about. I to this day have never had to sign for a package delivery from United States Postal Service, Amazon Prime, or UPS. So you got to do what you got to do, because some of these delivery guys may have just gotten like a costume and pretending to be a delivery guy because they've got your address, and it's because this is a scam that's been done before. So you guys be safe out there, especially if you are a Trezor customer. Moving on, the SEC allows Franklin Templeton funds to invest in on-chain money fund. This is Zoltan Vardai writing for Cointelegraph. Franklin Templeton received the regulatory nod to invest in its own blockchain-based money market fund under specific guardrails without having to adhere to physical custody regulations. The Securities and Exchange Commission issued a no-action letter on Wednesday stating that it will not take enforcement action if Franklin Templeton fund managers invest in cash in the Franklin On-Chain U.S. Government Money Fund, an interest-bearing tokenized fund that invests in U.S. government securities and aims to maintain a stable $1 share price. The SEC will also allow the affiliated transfer agent, Franklin Templeton Investor Services, to act as custodian for the tokenized funds and hold their private keys without adhering to existing physical custody rules. It comes in response to Franklin Templeton's formal no-action request letter sent earlier Wednesday. Franklin Templeton oversees $2.5 billion in on-chain assets through its tokenized funds, and it's the fifth largest tokenized asset manager, according to RWA.xyz. The fund giant launched a dedicated crypto division and acquired crypto asset manager 250 Digital in June as part of its push into crypto and tokenization. The SEC's letter described 12 conditions, including requiring Franklin Templeton to maintain systems that prevent unauthorized instructions and requiring FTIS to maintain administrative controls such as the ability to correct, freeze, migrate, or restore records. All right, so the fact that this is occurring is that the SEC has given Franklin Templeton permission to invest in its own tokenized fund is not the point of why I'm bringing this to you. Yesterday, I told you that the SEC and the CFTC both said it doesn't matter to them that the Clarity Act has stalled in Congress and won't even be looked at again until September the 15th, that they are going to go ahead and start doing rulemaking. Now, this isn't a rulemaking scenario right here, but it is part of the attitude that's been projected by CFTC and the SEC saying, we don't need the Clarity Act to move ahead. Because this plea, the no action letter request or the no action request letter sent by Franklin Templeton was sent yesterday to the SEC, and they already got the nod from the SEC saying, go ahead, we will not take you to court for doing what you're proposing. So it's an example that the SEC was not blowing smoke up our ass when they said it doesn't matter if Clarity passes or not, we're moving ahead. And it looks to me like they're putting their money where their mouth is. Goldman Sachs is going to acquire Neos investments in a $2.25 billion deal, adding Bitcoin income ETFs to lineup. Matthew DeSalvo, Bitcoin Magazine. Goldman Sachs has agreed to acquire Neos investment in a deal worth $2.25 billion that will give Wall Street giant another Bitcoin-related product for its portfolio, the banking giant announced on Wednesday. The deal will be in cash and equity, contingent on performance and service milestones, and will bring the Neos Bitcoin High Income ETF, ticker symbol BTCI, boosted Bitcoin High Income ETF, XBCI, and Ethereum High Income ETF, NEHI, under Goldman Sachs Asset Management. CEO David Solomon called Neo's approach highly complementary to Goldman's existing buffer, managed outcome, and income capabilities. Neo's co-founders Garrett Payoella and Troy Cates will join Goldman Sachs Asset Management as partners, framing the deal as pairing Neos' entrepreneurial spirit with Goldman's scale. Neos manages $30 billion across 19 different ETFs that use option strategies to generate monthly income. Combined with Goldman Sachs Asset Management's existing $40 billion in income-oriented options-based ETFs, the deal will push Goldman's active business or ETF business to about $80 billion, making it the 8th largest active ETF manager according to Morningstar, inside a broader $130 billion ETF platform. The move follows Goldman's earlier acquisition of Innovator Capital Management, rounding out a three-way combination focused on derivative income and buffer outcome strategies. So the real news here is that Goldman Sachs has bought a whole fund, an entire ETF fund that has 19 separate ETFs in it. But part of that package is a couple of Bitcoin ETFs. And of course, there's always the shitcoin ETF. So the race to start scooping up these smaller ETFs that include Bitcoin in them is starting. And that phase, I swear that phase is going to continue with Bitcoin treasury companies, specifically the smaller ones. I don't think anybody's going to pony up the amount of money it's going to take to buy Sailor out of, or Strategy out from underneath Sailor. But I'm talking about the smaller guys, the much smaller guys. The treasury companies that are failing are going to be bought up. And it would not surprise me if David Sachs as the head of Bitcoin Magazine and the Bitcoin Conference, it wouldn't surprise me if those properties ended up in the hands of somebody like, I don't know, Bank of America. It would be sad, but hey, you kind of did it to yourself anyway. Red Team news here from Cali. The Red Team, if you did not know, are the people that are working to shore up a bunch of Bitcoin projects and a whole bunch of other stuff too. But it really started with Bitcoin projects, using AI to scan the code bases and find problems and do all the things post cold card hack. So Callie is a member of Red Team, and he's got a fairly long note here on Nostr that I think is important for us to read and understand. Quote, gained a ton of new insights working on Bitcoin Red Team that I wish I could share without vague posting, but this is what I've got, Anon. We're experiencing a massive collision between decades of human open source slop against 2 weeks of Kimmy K3. Parentheses, not good. Everything is broken. Bitcoin is burning. Bitcoin is becoming stronger through all of this. Bitcoin is the obvious first target, but the rest of the world will follow shortly. Sometimes old things need to burn so new things can grow on healthy soil. Humans should never code in C. Just stop. Lightning is complicated and is more broken than the average. Sorry. Verification is free. We used to complain about slop pull requests, then about slop security audits. If you can't handle the information overload, stop complaining and use AI to sort through it. Those projects that started AI audits months ago are in a completely different position than those who did not. Projects need their own AI audit pipeline going into the future. The burden for a developer to keep software safe and secure is pretty stressful and not for everyone. It has become a lot more stressful now. Unmaintained projects are most probably broken. Don't rely on them. I'd rather one-shot it myself with a modern AI. Multiple, concurrent, diverse human approaches have proved to be the best vulnerability searching method. External red teaming will probably have to continue forever. We've basically completed a basic scan of virtually the entirety of Bitcoin open source. The low-hanging fruit is done. We've reported a ton of real, critical, and high vulnerabilities. Project maintainers across the board have validated our findings. Response speed is very different across projects and shows how healthy each project is. I recommend acting fast these days. Red team etiquette matters. If you don't disclose responsibly, boost on Twitter about your findings on a particular project, or make indications about the nature of particular findings, you've disqualified yourself as a serious security researcher. Trust is the most important factor in this game. If you lose it, it's very hard to win it back. Did I mention humans should not code in C? I know it sounds real bad. I get it, but we've got to be honest with ourselves as we move into the future. I've talked about this a couple of times. I'm going to say it again. We will never see the side of the river Rubicon that we just crossed. We will never go back to the world where AI wasn't involved in finding vulnerabilities, writing vulnerability-free code, if at all possible, and somehow or another just being involved in coding from here on out. And for, like this is like what, okay, here's the best one that I think Callie wrote here. We're experiencing a massive collision between decades of human open source slop against 2 weeks of Kimmy K3, and it's not good. Basically what it means is that that's what I mean by this side of the Rubicon, and we're never going back. Ever, 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 ever. Code that was written pre-artificial intelligence is not good code. It's just not good code. Not anymore. Not when you can just throw like $10 at Kimmy 3 or something like that to buy enough tokens to scan your code that you've been looking at for, let's say, 10 years. You've been making adjustments. You've found bugs. You've fixed those bugs. Not like AI can. It is a pattern matching machine. Humans are too, but we can't hold everything in memory like an AI can hold in memory. It's not that it's smarter than us. It just has a much bigger map to compare what it's seeing against versus what the map a human can hold in his or her head to look at code and compare against. We can't find the bugs that we write the way AI can find the bugs that we write. So from now on, if you are not using AI at the beginning of a coding project, and I don't mean in a way that where you just outsource all the coding to AI, that's not what I mean. Start writing your code. Write it by hand. Be the human coder that you are. And after you're done with the coding session or however it is you work, give that code to whatever AI you want to use to examine it and say, while I sleep, I want you to crawl over this code and I want you to find all the problems and then rinse and repeat until your project has an executable that finally executes. You will be much farther ahead of the game. This not only goes for Bitcoin projects or any other open source projects like your website. The HTML code for your website. Is your website okay? Because all this shit is broken. That's what Callie's trying to say. So just understand and be aware. Meanwhile, let's run the numbers. CNBC futures and commodities. Brent North Sea oil is down 1.25 point to 87.89. West Texas Intermediate is down 1 1/3 to 82.12. Natural gas is down almost 2 points to $2.75 a thousand, and gasoline is up only slightly, $3.15 a gallon. Murban crude is down 1/4 point to 89.87. Metals are down. Palladium is down 3.5 points. Gold is down almost a full point to 44.25 and 8 dimes. Platinum is down 2 1/3. Silver is down 1 1/4 to 64.87 an ounce. And copper is essentially moving sideways. Ag is fully mixed today. The biggest loser is coffee, 2.13% to the downside. Biggest winner is sugar, 1.89% to the upside. Livestock, live cattle down 1.2%. Lean hogs down 1.7%. And feeder cattle down 0.75 point. S&P futures up 0.42%. By the way, that is an all-time high for the S&P. It's now like, I don't know, $40 trillion worth. It's at an all-time high. Through all of this, the markets are, I guess, the legacy markets, I guess, are fine. I don't know, man. Michael Burry, 2 years ago, 1 year ago, said that everybody needs to get out of the stock market because it's going to crash. It took him 2 years to be actually correct about the housing bubble in 2008. He started working whatever he was working in 2006. That's how far back he saw the housing bubble. Is he right about the stock market? I don't know. But I mean, the fact that the S&P has hit this level through all of this shit gives me pause. And I'm starting to think if it's like, so last year, Michael Burry said, hey, get out of the stock market. I'm thinking that means that we have 1 year left to really start making some decisions as to what the hell we're going to do, whether you're in the stock market or not. It's not what I'm getting at because it'll affect the economy worldwide if Michael Burry is correct. And if you don't know who Michael Burry is, he called the housing collapse in 2008 before anybody else did. And he is featured as a major character in the movie The Big Short, which if you haven't watched, you need to go watch it. For some reason, we are still stuck at $63,560. It is a $1.28 trillion market cap for Bitcoin, and we can get 14.6 ounces of shiny metal rocks with our one Bitcoin, of which there are 20,069,466.76 of. Average fees per block are normal, 0.02 Bitcoin taken in fees on a per block basis. It's about 45 blocks carrying 88,000 unconfirmed transactions waiting to clear at 3 sats per VByte. Low priorities will get you in at 1. Hash rate risen just a little bit. 894 exahashes per second is the hash rate on the Bitcoin network at this time. From The Creep, yesterday's episode of Bitcoin and Jay throwing me 15,000 sats. Dude, thank you. And he says, thank you, sir. When it comes to pooling tokens for AI usage, the best way, in my opinion, would simply be to donate sats to teams who use ppq.ai. That's pay per queue, which I assume means pay per query, right? Pay per query. So go to ppq.ai and donate sats. All right, just figure it out from there. He also continues, every prompt and response is simply priced in sats and taken from your balance. I've found Kimmy K3 is excellent at finding, and it cuts off. So I got to go to, I've got to bring up a new window. Hold on for a second. Let's see. Okay. I found Kimmy K3 is excellent at finding obscure bugs and security issues. I use the PI harness and the PPQ API. The utility is very real, though it tends to run too fast and furious for my taste, and I don't trust these things as far as I can throw them. So I made it a slow thinking skill that forces it to literally slow down and wait until I fully understand what it's doing. I think it pays to keep a real-life human mind in the loop when working with LLMs because real thinking requires contact with physical reality, and LLMs have none. Jay, that is a very well thought out way to approach this entire thing. Thank you for reminding us all that ppq.ai exists. That is ppq.ai. Go there and see if you can help Red Team out. Nick Dose with 256 sats says, cheers. Thank you. I appreciate that. Nostr Gang with her standard 101 palindrome boost says, thank you, sir. No, thank you, madam. Satoshi Uzumaki with 100 sats says, thanks for the podcast. Sir, you are welcome for the podcast. That's the weather report. Welcome to part 2 of the news that you can use. Inner thoughts of every major AI model exposed in a massive exploit. We're just doing nothing but hacking. Welcome to Hacker's World. I swear, Decrypt. Jose Antonio Lons is writing this one. Security researchers have found a way to read the encrypted inner thoughts of every major AI reasoning model and uncovered 62 live API keys and 33 passwords buried in session logs that developers had shared publicly online without even knowing what was inside them. Quote, by decoding 315,000 reasoning blocks scraped from public repositories, we recovered 367 personally identifiable information artifacts and 182 credentials, the researchers wrote. Jesus. The paper, submitted August the 10th by a team from MATS Research and Ellis Institute Tübingen, the Max Planck Institute for Intelligent Systems, and security firm Snike, targets a specific class of AI, reasoning models. These are models that don't just answer immediately and instead start with an internal chain of thought, a step-by-step scratch pad where the AI works through a problem before showing you the answer, then delivers a final response. Anthropic, OpenAI, and Google all encrypt that hidden scratch pad. Encryption, the process of scrambling data into unreadable code, is meant to protect the company's intellectual property and keep sensitive, immediate reasoning away from users. The encrypted block gets passed back to the provider's servers with every follow-up message, maintaining the conversation without storing anything on the company's end. The flaw, however, is architectural. Instead of binding each encrypted reasoning block to a specific user, session, or model, all three providers use a single provider-wide encryption key across their entire ecosystem. Quote, these encrypted blocks are fully compatible and interchangeable across different sessions, users, and even different models within a provider's own ecosystem, the researchers wrote. That means a block of encrypted reasoning from Claude Opus 4.8 can be injected into Claude Haiku 4.5, a cheaper, less guarded sibling, without breaking Anthropic's rules. Haiku lacks the anti-distillation alignment, safety training specifically designed to stop a model from transcribing its own reasoning on command, that Opus has. Tell Haiku to read out the encrypted block verbatim, and it does. Quote, by injecting an encrypted reasoning trace from a given model into a weaker and less safeguarded model from the same provider, we force it to decode and output the trace verbatim in plain text, without ever jailbreaking the more capable model directly, the paper states. I love human reasoning. Quote, cross-model portability means Haiku 4.5 can read Opus 4.8's thoughts, lead researcher Alexander Panfilov wrote on X. The same attack reproduced across OpenAI's GPT 5.6 family and Google's Gemini model lineup. No special access required. Standard API access was sufficient to execute it. To demonstrate real-world damage, the team scraped 6,708 publicly shared AI agent transcripts, automated session logs that developers routinely post to GitHub, and Hugging Face for collaboration or debugging. They decoded 315,000 reasoning blocks from those logs. Developers frequently shared, this is a quote, developers frequently share their session logs and encrypted thinking traces publicly online, entirely unaware of the sensitive data hidden within those encrypted blocks, the paper notes. Most of those secrets never appeared in the visible AI output. They existed only inside the encrypted reasoning, invisible to anyone who hadn't actually run the attack. The vulnerability opens 4 attack vectors beyond simple credential theft: stealing proprietary reasoning patterns from AI companies to train competing models via distillation, extracting private data from shared logs, executing invisible prompt injection, where malicious instructions are hidden inside encrypted reasoning blocks that security monitoring tools never see, and finally 4, jailbreaking powerful models through their less guarded siblings. Let me read that again. Jailbreaking powerful models through their less guarded siblings. Their own family members are going to rat them out, dude. Anthropic, OpenAI, and Google all deployed server-side mitigations after the team followed responsible disclosure. As Decrypt previously reported, Anthropic has been a recurring focus for security researchers this year, especially as its latest models consume a lot more tokens in the process. The patches are live. The 6,708 session transcripts with decoded reasoning blocks have already been scraped from public web, are not really going anywhere. So they're going to have to safeguard whatever newer generation models they come up with, because all these are essentially toast. It's like there's enough here for Kimi 3 to basically scrape and distill every reasoning not algorithm, but we'll use that word for lack of a better one. Every reasoning algorithm across this family of United States-based frontier AI model companies. Fucking A. Really? You can't keep your shit in your pants is essentially what this is. And we're also, the embarrassment does double duty, because it's shining yet another color spotlight on the AI, on the United States AI frontier companies, because they're not helping Red Team. They're still not, I think maybe Red Team got some proprietary access somewhere. We're not quite sure. But in general, security researchers in the United States have to use Chinese models to help them with their security issues now. Because all of a sudden, guardrails get thrown up if you try to use something like Claude. And the American companies are really embarrassing themselves on the world scene. And they know that they are, which leads me to believe that there's something going on in the background, that they're like, we don't care. What we've got in our back pocket that nobody can actually see is going to make us billions and billions of dollars forever. I don't know if that's right, but they're really, really taking a chance on the terrible optics that they are laying out by not helping the security researchers in the United States shore up our code base. And I mean all of it. Bank code, web code, Bitcoin code, whatever code. It's all fucked. And we know that from Cali. Okay, Brazil's largest Bitcoin treasury firm plans an ETF with a 95% allocation to Strategy's STRC. Why? I don't know why. Maybe Francisco Rodriguez at a CoinDesk will tell us. Brazil's largest Bitcoin treasury firm, Orange BTC, is preparing to list a monthly income exchange traded fund that would initially put 95% of its portfolio into Strategy's preferred stock, STRC, and the rest into Strive's ASST equivalent called SATA. STRC and SATA pay recurring US dollar distributions. The company's Bitcoin remains on their balance sheets and is not pledged to the preferred shareholders. Yields are currently at 12.5 and 13.1% respectively. The digital yield ETF is planned to trade on Brazil's B3 in the country's fiat currency, the real, and distribute income monthly. Yeah, what could possibly go wrong? Orange BTC holds 3,950 Bitcoin, expects annual distributions to be equivalent to Brazil's risk-free rate, the interbank deposit certificate of 14.15%, plus roughly 3.5 percentage points net of the fund's estimated 1.3% total cost. The estimate depends on the preferred share distributions and the interest rate difference between Brazil and the U.S., Orange BTC Director of Strategy and Research Sam Callahan told CoinDesk. It excludes changes in DIGY11's share price and does not guarantee returns. That's the ticker symbol of this whole potential catastrophe that's about to happen. So we've got a Brazilian company that's going to put 95% of their Bitcoin into Stretch because Stretch has just been doing so well. It hasn't hit its $100 peg in weeks. Just buy the real thing. Just buy Bitcoin. I don't. Just stupid people are everywhere. MetaPlanet CEO shuts down Bitcoin sales speculation after $322 million transfer. Oh my God. What happened? Well, Johan Yun's going to tell us about it out of Cointelegraph. MetaPlanet CEO Simon Gurevich has shut down speculation that the Japanese Bitcoin treasury company was selling its Bitcoin holdings. Quote, "This was a routine custody operation. No Bitcoin was sold and our holdings remain 43,000 BTC, Gurevich said on Thursday. The company transferred 5,000 and change Bitcoin over a 24-hour span starting on Wednesday. Gurevich said that network fees to move the trove cost MetaPlanet $8. To move $322 million, it cost him $8. MetaPlanet, third largest publicly traded Bitcoin treasury company and the largest in Asia. MetaPlanet has continued to expand its Bitcoin treasury beyond accumulation, yada, yada, yada. But we're not done with MetaPlanet yet. We got one more piece of news about MetaPlanet, which I find interesting. Because right after that announcement that Simon Gurevich made, basically saying, no, we just moved Bitcoin from one address to another. We're not going to sell it. Everybody calm down. And I have to agree with Simon here. Just because a company moves their Bitcoin, it automatically sends shockwaves through markets saying, oh my God, they're going to sell. Why are we so trigger happy with this? This is ridiculous. Everybody needs to calm down. And I don't think he's planning on selling, at least not in the short term, because of this. Also from CoinDesk, James Van Straten writing, Bitcoin treasury company MetaPlanet unveils BitBonds with $1.3 million private debt sale. This was also today. Japanese Bitcoin treasury company MetaPlanet unveiled a continuous bond issuance program dubbed BitBonds, completing its first sale with 4 privately placed series worth about 200 million yen or a measly $1.3 million. The Tokyo-listed company said the unsecured senior bonds mature in roughly 3 years and carry an annual interest rate of 4% to 4.3%. Solicitation began in late July. It's now closed, according to an August 13th disclosure. MetaPlanet said BitBonds will sit alongside common stock, equity-linked securities, and preferred shares as a core funding channel. Future issuance will depend on funding needs, market conditions, and investor demand, with the company eventually considering registered public offerings. Unlike MetaPlanet shares, which tend to reflect changes in the value of its Bitcoin holdings, the bond offers fixed interest and principal repayments based on the company's creditworthiness. However, they are unsecured, they are unrated, and they are not principal protected, while the issuer's financial position remains heavily exposed to Bitcoin price swings. The bond also carries transfer restrictions, and liquidity before maturity is not guaranteed. The inaugural securities were distributed through wholly owned MetaPlanet securities to individuals and companies under Japan's small number private placement rule, marking the firm's broader push into Japan's yen-denominated credit market. The announcement comes as Simon Gurevich denied speculation that MetaPlanet had sold Bitcoin. So there we have it. That's all the news that you can use as of this morning, 9:10 a.m. Pacific Daylight Time. I've got things to do. I've got stuff to reach for, so I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.